Well, plenty going on in the FX universe at the moment, with macro events continuing to generate plenty of volatility. To see what trades he likes and doesn't like right now, we welcome back Nick Twidale from FP Markets. He joins me here in the studio. Nick, great to see you.
Thank you.
Can we start off with the Japanese yen? Because yesterday, and for those who aren't aware, the 10-year Japanese government bond did not trade once, not one lot, nothing. That's unheard of. It's no other markets, the most deep and liquid bond markets you can possibly find in the world. The ramifications are that you can't go and express any view about Japan through the bond market. It's happening through FX, and the yen is getting smashed.
It is getting absolutely hammered, isn't it? And there doesn't seem to be any stop to it. And I think we were just chatting in the break before. It's like we were hanging around these levels just above sort of 100, and for ages everyone was calling it a lot higher. And I think there's even a few people that have missed the train, and they're still getting on it, because as you said, you can't express it through the bond markets at the moment, and everyone is just looking back to the currency. So it's interesting that we look like the old correlation that we used to have pre-COVID was you'd see these moves in the stock markets and dollar yen would be finding a top, but there doesn't seem to be any top in it at the moment. And you know, on the charts, that when you look at it there does not seem to be a top coming in anywhere soon.
I know we've got to go back decades to go and find levels where the dollar yen was trading at this kind of points. Are there any technical levels that you know that we can go and look to as being potential catalysts that go and really accelerate more selling? We can see, obviously, on that chart alone, we can just start to see where the old highs were. Clearly, they were broken through those.
Yeah, I mean, just before we came back, as you said, we're looking back decades now. So you go into sort of those longer term chart patterns like Fibonacci's, and then looking for highs from decades ago. So it really is going to take a fundamental change, and it's either going to come from the BOJ or the market in general that's going to put a stop to these sort of moves. So it's still a buy on dips any way you look at it.
All right, so one ramification from the dollar yen move is that the US dollar is so strong at the moment. Rebounding back, that's despite some buying coming through the euro, which is a big component of it for the DXY. The outlook for the big dollar, we've got so much rate expectations priced in at the moment. So when you look at economic indicators, it's still looking the best out of a relative bad bunch. Where does it go from here?
Well, I still think we do see more appreciation in the dollar. And as you said, sort of the dollar yen part of that basket for the DXY is relatively small, but the moves are so big, it's having an impact on that. I think we're still, even though we've got these hikes priced in, I think there's still sort of further topside for the dollar. But maybe we're not going to see some dramatic moves probably across the other currencies. I still think there's room for euro to sort of trek back down again. I think sterling as well is probably going to get a top out at around about these levels short term. But I don't think we're going to see massive acceleration in that, because we've got so much priced in. I think now the market is in this sort of wait and see. They're happy to buy dollars on dips, but they're happy to wait for those. But also I think we're going to have to look at what other central banks are doing, how the market develops, how we go back to this normalisation. All these things are going to factor for where we go longer term for the big dollar. Yeah,
and it's clearly having an impact on the Aussie. The spike that we saw after that 50 basis point hike from the RBA on Tuesday didn't last long, and it's really the big dollar strength there is really generating some negativity across other asset classes. Let's have a look at the Aussie at the moment and see how it's looking technically. So let's bring that chart up in a second. So Nick, it looks like we've got not that chart for the time being. Okay. We'll move on. How about British pound? That's getting a lot of interest at the moment, including from a political sphere. We know that the no confidence vote against Bojo failed.
Yep.
But clearly, a lot of people are still looking at that, what's going on, and going, well, you know, what's political uncertainty going to do longer term?
I think political turbulence for the sterling is still going to put some pressure on the top, and like, even though he did get through that and we got a little bit of a spike, there's still a lot of question marks over there, and I think there's another year. I think there's a lot of expectation over there that in a year's time we're going to have another call for him to be removed. That's probably only going to give more uncertainty to the UK, for the government, and then obviously for the economy as well. And it's probably something I'll be looking at, that we see the dollar outstrip the sterling over the short to medium term.
All right, we do have the Aussie dollar chart now. Let's go back to that and have a quick look and see how it's looking at this junction. We saw it go and get knocked back pretty aggressively as well. That's the euro. That's also an interesting one. Why don't we go talk about the euro at this stage, because we've got the ECB meeting out tonight. Widely expected we'll see an end to the asset purchases, probably concluding at the end of this month. How quickly is it going to be until they actually start to go and move the refi rate?
Well, I think that's the big question. And so and this is what we're looking for tonight, if they give us an indication on that, that's where we're going to get a decent sized move in the euro. As I've sort of said before, I'm favouring the downside. I think they might still be, I mean, there's so many different factors for the ECB to take into consideration that they'll never throw their hat totally in one corner. I think that gives uncertainty in the market, and that probably puts a bit more pressure. Having said that, they come out and they start giving us some solid indicators of when they're going to go. Then I think there's topside moves for the euro.
How much opportunity is it going to offer around this? Because it's staggered in the way that the ECB goes and releases. So you get the statement comes out, and then you're going to get the press conference from Christine Lagarde. And I've lost count how many times you're going to see the statement, you see the new forecast come out, and you go, oh wow, it's going to be really hawkish or really dovish. And then come to the press conference, and it's almost the complete opposite.
I think for the day traders, it's impossible to call, isn't it? Because you have those staggered events, and it's not just one. It's not like a non-farm payrolls, and it's one big number, and bang, away you go. It's okay. So what we really want from the ECB, from a trading perspective, is we want those to line up.
Yep.
We want them to be hawkish. We want them to, I don't necessarily want them to be hawkish, but we want that consistency across the whole event, and then we're going to get a decent move in the euro. As you said, sometimes you're 50 points up and you're 100 points down before you know what's going on.
I had a lot of fun, a lot of stress over the years, particularly the euro crisis and trading around that event late at night. Nick, third time lucky, I believe we do have the Aussie dollar chart now. I really want to go and see it. There it is.
There we go.
So what are we looking at here? So obviously we've had a little bounce at the moment, but as mentioned before, that did get rejected at that 200-day moving average.
Yeah, I think that 200-day moving average is something that we're sort of focusing on a lot. It does seem to be having a decent effect, and you can see from that chart where it came in. I think, for those longer-term dollar bulls and Aussie bears out there, then that's having a key move for us. As you said, when we were talking about the stock markets earlier, we're getting a decent downside pressure there. That will normally put pressure on the Aussie. If we start to see commodities come off as well, I think that's where we're going to see the Aussies really start to accelerate to the downside. If we sort of stay as we are, then maybe we're just range trading for the Aussie for a short time. But certainly that focus on the 200-day moving average, and obviously the low that we saw back in May will be a focus, and that's probably the range locked in for the short term.